So what if you could spot a signal that predicts a massive, massive stock surge? Today we're going to break down an analytical tool that did just that, flagging one of the most explosive moves in recent memory. This is all about timing, precision, and finding that momentum the rest of the market completely misses.
113%. Let that sink in for a second. In just 10 months. That's a life-changing kind of return. And when you see a number like this, your first reaction is probably disbelief, right? And that's immediately followed by one single burning question.
I mean, seriously, was it just pure luck, some kind of insider knowledge? Or was there a clear, readable signal that really anyone could have followed? That's what we're here to find out. We are going to deconstruct this incredible rally piece by piece.
The company behind that insane 113% rally is Newmont Corporation, the world's largest gold miner. But as you're about to see, its journey to that incredible high was, well, it was a wild ride, to say the least.
Just look at this path. It's a total roller coaster. From over $53, the stock just gets crushed, falling over 40%. Then it stages what we call a false rally, a really deceptive comeback, only to collapse all over again into what analysts call a capitulation bottom. And that moment, that's the point of maximum pain when pretty much every investor has given up all hope. And it's often the exact moment before an epic run begins. So how do we make any sense of this chaos? Well, the answer lies in decoding the stock's momentum. And to do that, we need a special analytical framework called Momentum Cascade. Think of it like a special set of lenses that helps us see the real trend through all the market noise.
Now, I know it sounds a bit complex, but the idea is actually pretty simple. Instead of just looking at the price, we're looking at the speed of the price change. And we do this across 3 totally different time horizons to get a complete 3-dimensional picture of the stock's health.
The best way to understand this is to think of it like a weather report. We've got 3 time frames here. The short term, that's your 4-week momentum, is like the daily forecast. It's going to be choppy, it's tactical. The 12-week momentum is more like the seasonal trend. But the 24-week momentum, that's the climate. That's the most powerful force, and when it shifts, you really need to pay attention.
And that brings us right to the climax of our story. December 2024. This was the moment. This was when the daily forecast, the seasonal outlook, and that long-term climate all aligned to signal something huge was about to happen.
This table shows the exact setup. And just notice how all 3 timeframes are deeply, deeply negative. The 12-week momentum, right here, is at a staggering minus 30%. I mean, this isn't just a dip. This is maximum pessimism. It's a full-on capitulation where the market has just thrown in the towel. And ironically, that is often the single best time to buy.
So the really crucial point is, what happens next? The reversal unfolds like a textbook case study. In January, the 4-week flips positive. That's the first sign that the worst of the selling is probably over. Then in March, look at this. Both the 12-week and the 24-week turn green. That's sequential confirmation. Short, then medium, then long. That is the highest probability signal in this entire framework. The rocket was officially on the launch pad.
Okay, but this brings up a really important question. If this signal is so great, what about that false rally we saw back in mid-2024? Why did that one fail so miserably? Answering this reveals probably the most important lesson of all.
So as this comparison shows, the technical signal, all 3 momentum indicators turning positive, it was actually the same in both cases. So what was the difference? What gives? It was context. The false rally happened while the price of gold, Newmont's main product, was just flat and going nowhere. But the real rally, that happened just as gold was surging to record highs. The takeaway here is crystal clear. A technical signal is powerful, but it becomes unstoppable when it's backed by a strong, real-world story.
Okay, so we've completely dissected the past. Now let's apply this powerful framework to the present day in our case study, which is October 2025. What are the signals telling us right now?
Here's the current dashboard. And you can see the short-term momentum has dipped negative, which, at first glance might seem alarming. But look at the 12-week and 24-week trends. They are still incredibly strong. This isn't that all-negative reversal signal we saw at the bottom. No, this is the classic signature of a healthy pullback. It's what many would call a buy-the-dip opportunity inside of a powerful uptrend.
So, how do you actually act on this information? Well, it really depends on your risk tolerance. An aggressive investor might jump in right now betting that the pullback is over.
A more moderate approach is to wait for that short-term signal to turn positive again as a form of confirmation. And a conservative investor, they're going to wait for all 3 timeframes to perfectly align again, sacrificing some potential profit for a much higher probability of success.
And this quote from the source material just sums it up perfectly. Getting in at the absolute bottom back in December 2024 would have netted you an extra 30 percentage points of return compared to waiting for that confirmation in March. But that later entry was a much, much safer bet. It's the ultimate trade-off in investing, isn't it?
Which brings us to our final thought. As you look at your own strategy, what do you prioritize? Are you hunting for that perfect, high-risk entry to get the maximum possible gain? Or do you prefer to wait for all the evidence to stack up in your favor? There's really no single right answer, but knowing which one you are, that's the key.